Hello and welcome. Today's date is Wednesday, 27th day of August, 2014. My name is Derek. Welcome to today's chart analysis video, a very quick video. I decided to draw up a comparison for both the Dow Industrials and silver. And this chart shows how often it's up or down for any given week at that point, or over the last 100, close to 2 years. And well, if the price is higher from the previous week, I'd give it a point. If it was exactly the same, I'd give it a half a point, and if it was lower, it got none. So it tells us right now that 40 and a half of the last 100 weeks have been up weeks. And it was 44 and a half in here. But overall, this just goes to show more and more how obvious that it is that the price has been manipulated, pushed hard towards the downside, especially when you have the knowledge that these markets are priced in fiat currencies. Thus, it's an inflationary model, and the average should probably be over 55 or around that level because, well, they seem to always go up. There was a time when the Dow Jones was just 2 and 3 digits less than a century ago. And it was a big deal when it got to 4. And then at the end of the 90s, it got up to 5 digits. Today, of course, closing in on 20,000. Therefore, again, you see it go down from about 63 to 37, which was this point in here, showing you the hard hit movements that it's been going through. How it's obvious to me that this thing is going to come back up above here. Like you could see in 2004, all the way up into here. More times than not, the price of silver would be an up week. But if you're in a casino and they have bets, this week, up or down. If you're an odds maker, are you going to offer somebody even odds or close to it on a down week? After all, because you know the manipulation that's going on, it might be a safe bet, because until you start to see this thing coming around above here, then the bias is still that they could just bring this thing down further. But you know that it's going to be going higher. If you're looking to be fishing for a bottom, okay, let's buy at 19. Oh man, it goes down to 17. And let's just hypothetically assume that it does. I guess I lose on my bet. Oh, I'll bet again. Oh, down to 15. And in a situation like this, if say you're playing different types of stocks, then that could turn out to be a winning play or a losing play. If the stock goes to nothing and you keep buying on the way down, you lose. Plain and simple. If the silver price goes down to, say, $6 in, say, 2016, that's the bottom, and then it rallies up to 15 in 2020, we'll say, and then maybe that high will be its high that it will never see ever again. Well, you would lose on that. But personally, because I know it's an inflationary system, I am betting that that's not going to be the case. And if you were to buy at 19 here, then you buy at 17, then you buy at 15, yet years later it comes back up to 17, 19, 20, 30, 40, 50. Well, now buying here, although at one point was a losing play, would be that of a winning play. And that just goes to the whole theory of buying when it goes down rather than when it goes up. But again, since here, more times than not, the any given week has been a losing week. And I guess until you start to see it coming up to here, there's no reason to state that the trend is going to be any different anytime soon in the short term. Thank you for tuning in and have yourself a great day. Bye-bye.